Hey everyone, it's Rob Folia Properties at Keller Williams Realty. And it is the first, well, actually, excuse me, the second of the month here. I love to drop these videos on the first when the first falls on a work day. And the first was actually my birthday yesterday. And so, just wanted to actually take most of the day off yesterday and figured I'd get the video in today. A day late, so not too bad anyway. But wanted to go over some stats. We're now into May, so we have seen a solid 4+ months now of real estate activity here in Middle Tennessee. So let's take a look and see what the market is doing in 2024. What are we seeing? How's the market? Basically, let's answer that question. Um, Let's start with interest rates. Now, this will update today at some point. It hasn't updated yet. And so I will be curious to see, and I'll keep my eyes on it to see if it's really changed all that much between now, or excuse me, between last week and today. But this is straight from Freddie Mac. This is the weekly averages in the U.S. for just 30-year fixed mortgages, and you can see 15-year here too. But I really think that it makes the most sense to pay attention to 30-year for us. You can see the 30-year fixed rate mortgage average, for the last 7 days for this right here is in the low sevens. 7.17% is what they're reporting. You can see it's an increase. You can see in the last 2 weeks, in fact, from April 11th to April 25th here, we saw rates go up, about zero point 0.3, zero point 0.4 points. If I'm doing the quick mental math, about zero point 0.3 points. Point being, no pun intended there with the points. Point being, if this trend continues, who knows? We might see rates spike like this again, like we did last year. In fact, if you look at where things were in May last year, they were low sixes. They spiked, went down a hair, spiked, went down a hair, spiked, went down a hair, spiked again. And they kind of peaked there as they were getting into the eights for some lenders or some buyers, and then came down, about a point from where they were. But now they're back up about halfway between the lowest and the highest what we saw last year. I'll be curious to see how this trend line continues. This does impact people in a pretty profound way. Interest rates are not just a buyer issue. And what I mean by that is if you're selling a home today and just say you're looking at how the market performed in January, where rates were 0.5% lower than what they are today. A lot of people might not realize that 0.5% is actually making a home. It's impacting a home's affordability by 5%. And here's what I mean by that. And in fact, let's just look at some actual real life numbers, just so you can see exactly what I mean. So I've got pulled up here a mortgage calculator. If you're curious about this and want to play with numbers, and I'm kind of a number nerd, so I don't mind playing with numbers for you. But if you want to play with numbers yourself, by all means, just go to my website, foliaproperties.com or foliaproperties.kw.com. Either way, it'll take you there. And I'm just going to play around with a $500,000 home that is, yeah, there we go. We got everything plugged in that we're putting 20% down on. The reason I want to make sure that we keep 20 in here is just so we don't have to play with PMI, private mortgage insurance. We won't get into all that right now. But you can see if rates were 3%, just because that's what the mortgage calculator defaults to here. And so if rates were 3%, we'd be seeing a payment of a $500,000 home, $400,000 mortgage with taxes about 200 a month, insurance about 1,000 a year, payment close to 2 grand. Now, we're not seeing 3%. We probably won't see 3% again. Maybe not in our lifetimes, but not anytime soon. Let's put it up to what were we just talking about? We said 6.6 is where it was earlier this year. Let's throw it in right there. We'll say 6.6. So you can see nothing else has changed. 6.6% is the rate, but nothing else has changed. $400,000 loan amount, same property taxes, same insurance. The payment was a little less than 2 grand before. 1969, I think, was the number. Look at this. 6.6%. We're at 2837. Let's just keep that number in our mind. 2837 for a payment. Now let's increase it to where rates are reported at least last Thursday, 7.17%. So again, 2837 is the number. I know I'm talking a lot of numbers, so hang with me. 7.17. We won't change anything else. So we were at 2837. Now we're at $29.90. So they've gone up. What is that? Just doing the quick mental math, about 150, a little more than $150. Now, you might be thinking only $150 for 0.5%, Rob. That's not so bad. That's about 5% of this payment. Just again, quick, easy back of napkin math. I don't want to break out a calculator. I've talked enough about numbers already so far. $3,000, 10% would be $300, 5%, 150. That's what it's gone up from a payment standpoint, just going up about 0.5%. Um, Point being that when buyers are buying a home, they don't care what your home is priced at. I mean, well, some might, but they're going to really care. Most buyers, at least, are going to care what their payment is. That's what they've been pre-approved on. They've been pre-approved to buy, just for this instance right here, a $500,000 home with a $400,000 down payment. That's what their pre-approval amounts for. And so, it's for really for this payment, because this payment is what fits into their budget. Just say the interest rate trend continues. Say, gosh, we've gone up January to April. So in a 3 month span, we've gone up 0.5%. Let's just say that trend continues 3 months from now. It's end of July, beginning of August, and rates are now 7.7%. Now all of a sudden you're at 31.35 per month. So a 1% increase in rates has made this payment, because we were at what, 28.37, whatever it was before. Bottom line is it's gone up about 10%. The payment has increased about 10%. That's going to impact what somebody can afford, because if we start changing price now, and we start saying, okay, well, it's a $450,000 home, still putting 20% down, not changing anything else, boom, we're right back down to 28.50. Again, it's not exact dollar for dollar, but it's very close. We've gone down 10% here in home value in order to keep this payment the same. Now, the reason I'm bringing all this up before we look at any statistics is that it's got to make sense for anyone to sell a home right now. Well, and to buy, of course, too. But I'm really talking to anybody who might be thinking about moving, someone who might be looking to sell their home and buy something else. It has to make financial sense for you. There has to be a reason behind it, is what I'm getting at. And especially in this kind of rate fluctuation market, especially with what rates are today compared to, say, down here in 2021, even, where I know people think of the pandemic as when rates really dropped. As you can see here, 30-year fixed were in the high twos. But even in 21 into the beginning of 22, where they were still in the threes, man, it's a different buying market right now from an affordability standpoint. And so that impacts the buyer's ability to buy your home. It impacts how much your home's appreciating. There's just so many factors that go into it. And so I do want to point out, before we even look at market trends, if you're curious about your situation, just reach out. Just give me a call. I'm happy to answer your questions and go from there. And in fact, before we even look at, I have one more general statistic that I wanted to share with you. So NAR, the National Association of Realtors, they put out statistics on a regular basis. The latest news here, they have not published it for, in April of 24 yet, but you can see the latest news, home sales down 4.3% nationwide. It's because, and the interesting thing, and we're going to couple it here with something as we start looking at some statistics. The interesting thing is, it's not because, it's not because it's a bad time to buy or sell. It's just the reality of the high interest rates. It's making people say, hey, does it make sense for me to move? And it's just almost making the market stall out, is what I'm trying to say. Again, that doesn't mean it's a bad time to buy a home or to sell a home or anything like that, but it means it just has to make sense financially and from a life situation for you to move. But let's look at, I've got pulled up here Rutherford County statistics. Rutherford County is where my office is. I just wanted to pull this up. I don't want to dwell too much in numbers here, just because we've already talked so many numbers already today on this video. But I just wanted to look at year-over-year trends. Because if we look at April of 23 again, where were rates a year ago? For the last week in April of 23, rates were 6.5%, 6.43. Today, 7.17, about 0.75% higher. Again, that makes somebody's home 7.5% if it's 0.75%. That makes them 7.5% less affordable. It makes a home 7.5% less affordable. It makes somebody's payment 7.5% higher, even if nothing else changes. So just pointing that out. And so when we start looking here at some of the trends, you can see new listings is down significantly, 17% year over year. Under contracts are up, which tells me, oh, here I'll highlight the percentages here rather than the what it's doing this year. Under contracts are up, which is telling me that if a home is out there for sale, it's selling as long as it's priced right, of course, too. And I want to make sure I stop on that for just 1 second because in fact I've had a couple of conversations recently with people who've had their home for sale, might even still be for sale right now, and they're of the mindset, well, hey, the market's not, things aren't selling. This tells me they are. I mean, and in fact, I can pull up other counties too just to take a look. But this tells me that new listings are going down, but under contracts, there's 10% more homes that have sold when under contract in April this year compared to last year. So buyers are still out there. It's just not um there's just not as many homes, which limits the amount of kind of like, resale home buyers then. Not as many homes are hitting the market, so the buyers that would be selling their home and buying something else, that's not out there right now. A couple other quick numbers to take a look at. You can see sales price, the median sales price. Well, I have the average one highlighted here. Average is up 14%. When you look at the median, it's up 9% year over year. Prices are still going up despite the fact that and it's really because inventory is down. So despite the fact that interest rates are rising, home prices are still rising because there's no inventory. I want to share one thing before we move on from this. If you're a home seller, homeowner, you're on the fence about selling because you're just thinking about, well, hey, what's there for me to buy? What can I do here from a purchasing standpoint? The reality is, if this new listings, if this goes going up, and you can see, I mean, just the 3-year trend here, new listings in April of 24, even lower than April of 22. If new listings was trending upward right now, that would cause home prices to not be trending upward because it's the supply and demand. If supply was rising and demand is kind of stagnant, because I know I'm just talking about good demand right here, but if demand was kind of stagnant because the reality is interest rates are rising significantly still, um, it would cause a little bit more of a buyer's market dynamics. Hope that makes sense. Let's just look at one other county because I know, excuse me, Rutherford County is a bit of a little bit. I don't want to call it an outlier, but it's very much still in growth phase. Some other counties you might be thinking, have they slowed down? So let's just look at Davidson, Nashville's county. Let's take a look. New listings, you can see down 5%. However, new under contracts up 11% compared to the 23. Don't pay as much attention to this. You can to an extent, I guess, in terms of new under contracts compared to 2 years ago. But the reason why I say that is, again, 2 years ago, when you look at interest rates, just trying to find my mouse there, when you look at interest rates where they were 2 years ago in beginning of 22, I mean, they were starting to rise, but they were still 4 or 5%. Again, do that quick back of napkin math. Interest rates, let's just find 2 years ago exactly. April 28th, we'll call that 2 years ago exactly. 5.1% for a 30-year fixed, 7.17% for a 30-year fixed right now. That's a 2% increase. Again, that back of napkin math, 2% increase in rates, 20% increase in house payment. And so that's a pretty significant change is what I'm getting at. But the reality is, under contracts are still up. Sales price still trending up. Median sales price still trending up. In fact, I like median sales price for a county like Davidson with a little bit more higher dollar inventory out there than, say, a Rutherford. A little bit better from a trend standpoint because sale average can be skewed by some insanely high sales, whereas median is really telling us kind of that baseline of what the market's doing. That's a 9% increase, 9% increase over last year. Days on the market till closed, 4 weeks until closed is the average, which is crazy. That tells me there's a lot of cash buyers that are out there still shopping. But again, it also tells me if you're on the market and you're not selling. In fact, let's look at one timeline here. I wasn't going to look at too many of these graphs, and I'm already longer on a video than I was anticipating being, but I get a little bit nerdy when it comes to looking at these numbers. Let's look at median days on market prior to contract. Let's get rid of the other one just to make it simple. You can see median days on market, 7 days for Davidson County last month. 7 days. So the median time it takes for a home to go under contract is 7 days. That tells me, guys, if you're a homeowner and your home's not selling, you need to rethink what you're doing. If you're a for sale by owner and you're trying this on your own and it's not selling, you got to hire a professional. If you've hired a professional and they're not getting results, if it's been sitting out there and they're not talking to you about what needs to change, they're just having they just bought a listing, which in real estate terms that just means they told you a price to get their sign in your yard so that they can get some free advertising. It's all it is. That's why I always talk with my clients and I tell them this is how we need to sell your home. I don't want to list your home. I want to sell your home. That's how I am about real estate. So anyway, I don't want to get on my high horse about it, but just wanted to share that because just some recent conversations I've had. But anyway, I'll cut everything off here just because this is, I've already gone a little longer than anticipated today. Interesting market to say the least. Still in this little bit of flux. I'll be curious to see when we eventually hit this tipping point in our real estate market. When with prices just kind of being what they are, still rising, interest rates still rising, although down from 6 months ago, up from last year. um Inventory still dropping. When are we going to hit that tipping point of no demand and and inventory starts to rise? We'll see. I'll be curious. But anyway, if y'all need anything, again, no question too big or small. Happy to answer them all. Reach out 615-238-7578. You can hit reply if you're getting this in your email. Leave a comment. Happy to answer that too. But y'all, I appreciate you. We'll talk to you next time. See you.